Solana has moved up over 74% since the end of January 2024. And I still think Solana has some more growth in it before we see a correction. In today's video, we are jumping into the technical analysis and aspects of Solana's SOL token. So let's roll the intro and get right down into it. Okay guys, welcome back to another video update, and today we are of course taking a look at Solana. Here we have SOL paired up with USDT. We're on the 4-hour Binance chart, and yeah, it's got some interesting kind of developments going on here for SOL, right? So we're going to make things nice and simple. Obviously we can see we breached the previous swing high. Okay, that was up here at $126.36. Now we do know that our targeted range for this move to the upside was up here between 141 and 168. I'm going to go ahead and draw a little yellow box area just on here to help show you where that is. Okay, so 141 to 168. Now, if I take the fibs off and we can see the kind of yellow box area here, there's a few interesting things that are unfolding right now for SOL. And yeah, we've got a few different options. I kind of want to show you my thoughts and kind of approach to this. So start off with some trend lines. Okay, not the best tool in the arsenal, but it helps you understand, a little bit of what is going on. So here, with this particular trend line, we can see that we had a breakout, or at least an attempted breakout. We failed to really get this in a strong position. Now, at the point of recording this video, at 0800 hours UTC, you can see here that we closed back below this trend line. If I move this ever so slightly in line with that wick over here, you can see that we did close below the trend line. So we kind of are dancing around this trend line, trying to see whether or not we can turn it into a support line and take us up to our targeted range. Okay, if we get rejected here, then obviously the thing to do will be short, right? Tight stop loss, and profit's probably going to have to be down on the 50 EMA, 50 SMA, something to that effect. Okay, so there could be a short opportunity there. Likewise, if we can get a good strong breakout here as well, stop loss down lower than the previous swing low, and target out that higher range in our yellow box area, you get a good risk reward ratio of about 2.67. Again, I'm going to be waiting on the sides here, waiting for confirmation of the move, not just jumping into a trade just because we feel like we have to be trading for whatever reason. Now, of course, if I am to be leverage-based trading, I am going to be trading on 𝗕𝗘𝗓. 𝗕𝗘𝗓 is my go-to platform when it comes to all my leverage-based trades. There is an affiliate link in the description down below, so if you haven't yet signed up to 𝗕𝗘𝗓, I do urge you guys to check it out. If you do go ahead and use that link in the description, you are eligible for up to $30,000 of rewards and bonuses, depending on how much you trade and deposit on the platform. Now, there are terms and conditions that are associated with the affiliate link in the description below. And not all countries and jurisdictions are eligible, so do make sure you go ahead and check out everything on the website in terms of terms and conditions. Now, also, it's worth noting that there's lots of tools available at 𝗕𝗘𝗓 for any newcomers, and obviously lots of demo accounts and things like that to get you into understanding how to trade and the risks associated with it. Trading cryptocurrency is incredibly risky, and you do run the risk of losing all of your investment capital. So just make sure you're very aware of all the risks involved. Let's jump back down into the charts here. So for Solana, we can see here that we have the potential breakout here on Solana via this trend line after breaching its previous swing high at $126. Now, if we take another trend line and we throw this down at the bottom here, you can see that we're pretty much just in this parallel channel, and that is the problem. Okay, we are looking for a kind of breakout of this trend line, of this channel, if we can possibly get it. Alternatively, if we can't, well, the next stop is going to be down here. Now, the parallel channels, unfortunately, if we were to see this kind of playing out like so, would ultimately lead us into a big breakdown, okay? An overlapping candlestick pattern that we see here, let me actually click on the button, overlapping candlesticks that we see here, okay, if we were to come down to this low trend line, this is a bearish setup, okay? This ultimately will be a bit of a breakdown from here, okay? Higher highs, higher lows, yes, but we have overlapping structures, not a good sign. It's the same way that we saw this with the move to the downside over here, right? We had lower highs over here and lower lows, right, over here, and we broke up, right? A lot of people will say lower lows, lower highs, bearish, right? Go short on the market, and higher highs, higher lows go bullish, go long on the market, right? But actually you can see here within this very setup, it doesn't look overly great. Now there are some positives though, okay? So knowing that there is, a possibility for a breakdown from here is one thing, but also looking at the market through different lenses and different perspectives is also very, very important. This allows us to try to get an idea as to kind of whether or not we should be thinking more bullishly than bearishly. Now, there is, of course, the idea of potential inverted head and shoulder pattern. It's not the best one. I don't like it, but you can kind of see a shoulder here, a head here, and a shoulder here with your neckline being broken. And then obviously we'll target out that higher range, right? So that's the breakout situation. Let me show you that using the correct tool in TradingView rather than just doing some really basic drawings. We can see here we have a shoulder, a head, and if I can find, it'll be here, here, and here. And I just need to actually put that in line there. Okay, so you can see here that we have this neckline. We broke this neckline and we rallied. Now, this inverted head and shoulder pattern would basically be targeting out right up here at that 1.618 at $152. Shows you we're still progression to the upside, right? So as I kind of opened this video, I don't think we're necessarily finished with the moves to the upside yet. Okay, and so our head and shoulder pattern here, or the inverted head and shoulder pattern, also shows you this target range. Now that's not the only pattern that we have. Okay, we can also use a few additional other tools here, such as actually, did I draw that correctly? Not sure I did. No, I'm using the wrong tool. Okay, let me grab the correct tool for the job. This one just over here, this being a cup and handle pattern. Okay, very similar to that of our inverted head and shoulder. We can see a cup and handle also targets out, you get it, that 1.618 at $152. So whether we are inverted head and shoulder pattern or cup and handle pattern here, which you can see also stayed above that mid level there, so everything on the cup and handle is played out quite nicely, targets out that $152. So that's a key area, right? $152 seems to be a key area with a couple of different patterns, inverted head and shoulders, and of course the cup and handle. Now, what about other structures? Well, this is where we get into a slightly more complicated territory where we go into Elliott wave theory. Elliott wave theory, we are looking for a fifth wave movement. That fifth wave movement, of course, is this entire yellow box, right? That's why we know that this is the target range. Okay, that's because this is where our expected range of a 5-wave move up here, the 5th wave move up here is likely to go. Okay, so inside here, inside this entire move, we would be expecting 5 waves. Now we don't have that, not yet anyway. That means that we might extend above and beyond this yellow box area, or alternatively we end up in a diagonal base pattern. Again, it still looks like it's going to be that higher range. Let me show you what's going on. So here we have a potential wave 1, okay, this little area here, and we have this little retracement, and we can see that we've rallied up so far just above the 1.236. We actually have to rally up to $150 on the 1.618. This one right here, you can see how all these numbers are coming together right in the middle here. We had $152 on the inverted head and shoulders, $152 on the cup and handle, and we have $150 on a third wave impulsive breakout on Elliott wave theory. Okay, so everything is kind of showing us that we should be thinking a wave 1, wave 2, all of this up here will be a wave 3, then down for 4, and then up into that final 5th wave, taking us into that higher range. But as I said, overextensions, right? What does that look like? Well, because our third wave should also contain 5 waves, we have a problem. The problem is that we actually only see 3 at the moment. Let's go ahead and bring this into play. Okay, here we can see that we haven't yet hit the 1.618 of the internal 3-wave movements or 5-wave movements here. That means that we're likely to over exceed that $150. Let me show you. Here we have a wave 1, a wave 2, and a wave 3 only happens at $146. So it might be that we hit $152, we correct down, we rally up again, And all of that is actually just the wave 3 before we correct down for the wave 4 and then have another wave 5 to the upside. Okay, so here you can kind of see the inner workings and the mechanics behind why we are targeting out slightly higher. Our inverted head and shoulders and our cup and handles are only showing you a fraction of what is potentially going to happen here. They're showing you that $152. That $152 is more than likely just going to be the wave 3/wave 5 of the internal workings just here before we collapse down a little ways and then have an additional push to the upside, basically targeting out above and beyond our normal range and potentially upwards towards $170. Considering the price right now is $131, this actually shows us with some potential for long positions, right? So here we can be targeting out that higher range and put in the tight stop loss down below the 50 EMA, for example. This shows us with some pretty decent progression. Now, where does it all go wrong? Well, for Elliott Wave theory, we cannot cross down lower than $118.69. So we know the invalidation areas, we know what we're kind of looking for, and we know what we're kind of targeting out. So whether you are a price action trader with breakout situations on your trend lines, whether you are a pattern trader with your cup and handles, your inverted head and shoulders, or whether you're more into the world of complex Elliott Wave theory, we can see that Solana has so much more progression to the upside. So guys, let me know what your thoughts are on all of this in the comments down below. And why don't you check out this video right here where JB is going through his recent thoughts on some fantastic projects.